Hello, everyone, and welcome to Governance Edge, where we explore emerging trends shaping board oversight and governance. Today, we're joined by Travis Wofford, a partner at Baker Botts, who's been closely involved in drafting and revising Texas's corporate statutes and shaping its new business court system, making Texas a more attractive alternative for companies traditionally incorporated in Delaware. We're talking about what's being called DEXIT, companies choosing to redomicile from Delaware to Texas and what that means for boards, general counsels, and investors. So, Texas has launched a specialized business court in 2024 and followed that up with some sweeping updates to its corporate statutes earlier this year. Travis, from your perspective, what problem was Texas trying to solve for, and what's the broader intent behind these reforms?
Sure, and thanks for having me. The basic theme here is that this is history repeating itself. So in the 1800s, New Jersey was the leading corporate domicile, which explains Exxon's New Jersey domicile. Delaware copied New Jersey's business-friendly approach to catch up, and then made some improvements. For various reasons, New Jersey decided to become litigation-friendly, so business chose the Delaware alternative. Today, Delaware is the leading corporate domicile, but increasingly invites judicial second guessing. Think Bluebell Ice Cream's Caremark claims and Tesla compensation cases. These inject uncertainty into board decisions, and if that trajectory continues, the market may again look elsewhere. I think now it's Texas's turn to position itself as that alternative, but the goal isn't to eliminate all litigation or regulation. It's to deliver clear rules so that boards know how to comply, how to allocate risk, and to get back to running the business without unnecessary distractions.
Right, makes sense. So let's talk about what's actually changed. How is this going to work in practice, and how is it different from what most directors are familiar with under Delaware's law and Delaware's Court of Chancery?
So Texas isn't trying to invent something novel here. It's aiming to give directors what they expected from Delaware in the 90s, a judiciary that understands business and a framework that prizes predictability. So the new business court creates subject matter expertise, and Texas corporate law grounds fiduciary duties in a statutory business judgment rule that reduces reliance on sprawling judicial doctrines that have developed over time in Delaware, like Caremark, Revlon, Omnicare, Blasius, and the like. So the result is a clear, predictable guidance and fewer surprises on how core decisions are reviewed.
Right. So it sounds like the key word there is predictability.
Yeah.
So for directors and officers, what are the most important changes to know about things like the codified business judgment rule, jury trial waivers, and limits on derivative suits? How many of these changes alter the risk landscape for boards?
So, so I think the most important thing to know is that Texas is not a Wild West where bad actors operate with impunity. Responsible business practices and fiduciary duties matter. Reincorporated to Texas doesn't stop securities disclosure lawsuits, for example. Texas just gives more clarity and certainty in terms of the corporate law. So the codified business judgment rule decreases reliance on judicial interpretation, as we mentioned, and that promotes stability for corporate decision making. There are also statutory protections for directors and officers in related party transactions to provide a clearer path for execution. Texas has more robust director and officer indemnification protections than Delaware. Texas corporations can set minimum ownership and shareholder holding period limitations on who can bring books and record demands, who can bring derivative lawsuits, and who can make shareholder proposals. Well, that changes very little for your significant long-term shareholders, but it does raise costs for litigation and activism industries who make their livings bringing lawsuits or stoking outrage.
Right. So Delaware has decades of case law and deep investor trust. How are institutional investors, proxy advisors, and legal counsel reacting to companies that might want to redomicile to Texas? Are they intrigued or are they skeptical?
So I think we've got investor support. There are a lot of the investors that are moving to Texas themselves, that are setting up Y'all Street here. That includes the NYSE Texas and now the Texas Stock Exchange. And it's the large institutional investors who are helping to fund those efforts. They're also helping to support the changes in the corporate code, both in dollars and in terms of advice on what those changes should be. I think that ISS and Glass Lewis are still a bit skeptical. In part, that's because when companies move to Texas, they often see it as an opportunity to make other changes to their charter that may not be favored by ISS and Glass Lewis. I do think that the Delaware Plaintiffs Bar does not like it when companies move to Texas.
Now, I feel like we could have a whole nother interview on ISS and Glass Lewis, but we're not. Okay, so we're seeing headlines as we talked about of this wave of change called DEXIT, and even examples of companies like Coinbase and Dillard's announcing they're going to reincorporate to Texas. From your vantage point, are we looking at a few symbolic moves, or is this the beginning of a real shift?
So Delaware is still a great place to be incorporated. And many of my clients are very happy there. Moving to Texas is not for everyone, but boards now see a credible alternative to Delaware, and they might want to explore whether it's right for their company. So some factors that make a company more likely to move to Texas: controlled companies or those with significant shareholders or regular related party transactions, pre-IPO companies, candidates for M&A or strategic transactions that are prone to shareholder litigation, companies in highly regulated industries where Delaware's Caremark framework might not fit their stockholders' risk preferences. So that could be biotech, fintech, energy, defense, or otherwise. Companies that are prone to shareholder activism, and most importantly, companies with Texas operations or that are considering a move to Texas. And Texas is creating very attractive financial incentives for the moves.
Yeah, that's great. So that really helps. So some critics say that these reforms make Texas too management friendly, reducing the shareholder rights. How would you respond to that concern?
So I think on the spectrum, you have Delaware on one side and Nevada on the other, and Texas is trying to fill the Goldilocks zone in the middle. I think all three of them offer meaningful benefits depending on your preference. And that's why when you're making a decision, you need to have advisors that can help you navigate all three jurisdictions. Beyond having a strong Delaware practice, our teams worked on the leading case defending Liberty TripAdvisor's move to Nevada. And I sit on the Texas State Bar Committee that helps write and review the Texas Business Organizations Code. There are a lot of companies looking at this, and there's a lot to think about.
Yeah, absolutely. So looking ahead for boards that are curious about Texas as a potential domicile, what should they be watching over the next year, either in the courts or in early corporate adoptions? 2 years from now, what would success look like for Texas? Two
So
questions.
yeah, so what to watch is this coming proxy season. So Coinbase just announced there will be more to come in varying industries, and that will pave the way for even more companies to follow suit. Success, look, I think Texas looks a lot like Delaware of the 90s or New Jersey of the 1890s. But unlike Delaware, which doesn't really have many operating businesses other than DuPont, success for Texas isn't just about reincorporating. Texas wants to be the place where business gets done. As the eighth largest economy in the world, Texas is the #1 U.S. exporter for 23 years in a row, #1 in high-tech exports, 23 seaports, 35 foreign trade zones. We got 50 Fortune 500 headquarters. We produce more hydrocarbon, wind, and solar than any other state. And oh, by the way, there's no personal or corporate income tax in the state. So if people are reincorporating or moving operations or moving their headquarters, that's what success really looks like for Texas. I really think that the governor's quote is helpful in understanding the business-friendly culture across the state, which is when businesses succeed, Texas succeeds.
Yeah, that is great. All very, very good points. Thank you so much, Travis, for helping us unpack what's behind Dexit, how these developments could shape corporate governance in the years ahead. And thank you to our viewers for joining us for Governance Edge, where directors stay informed, connected, and ahead of what's next.